Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. So, obviously, in the past week, the Bears have retaken control. Not that they were not in control. The market had taken a couple of decent baby steps from mid-May to, early June. But as I like to say, it sort of put itself in position to maybe take a few, real steps. But obviously, the Bears have taken control. We've had almost like a mini crash here in the last week where the major indexes are down 8, 9, 10 more percent. And we're seeing everything get thrown out. Energy stocks now are, weak, all sorts of commodities, consumer staples, utilities, the whole thing. And I'll go into this. It could be this is the third leg down, which basically means we're kind of maybe in the panic phase. I mean, no predictions, but just seems like we're kind of getting to that point. In Cabot Growth Investors model portfolio, we've been 80% cash for a while. We're actually doing a little trimming today. We're something like 88% cash now, which sometimes doesn't feel like enough. But that's kind of, we're mostly safe on the sideline. I got a lot of charts to show you, but just first, I just want to take 30 seconds and just say, number one, the main thing is, be defensive, be safe. We've seen this before. In fact, I just got a paycheck this week. Been here now 23 years, started with the biggest bubble ever, and then one of the biggest bear markets ever, and the internet popping, and then of course saw 2008 too, and everything in between, pandemics and quantitative easing. We'll get through this. The country will get through this. There's going to be some great opportunities on the other side. So don't, bury your head in the sand. Okay. But at the same time, respect what's going on in the market. Going forward, one of my biggest pieces of advice now is to ignore the noise. Back when GameStop and those stocks were going up, remember all the meme stocks? I'm not saying I called everything perfectly, but, it's like keep your feet on the ground, take some partial profits, try not to get too high or too low. Right now, it's almost the opposite. Everyone's talking about the Fed and the market can't do this and the war and inflation and how bad the country's doing and so on and so forth. We'll come out of here, but the key is that your best signal to get out of this market was when leading stocks broke in November, December, and when the market then broke in early January. That was your clue, not about what the Fed's going to do or 75 basis points. And your best clue about when to get back in is going to be by following the market itself. Okay, so it's fine to read the stuff about the Fed or the war or how the system is over leveraged. That always comes up when the market's down 20 or 30%, that sort of thing. It's fine to read that and believe it or whatever. But in terms of taking action, just keep your eye on the evidence itself. Right now, clearly the evidence is negative. So you should remain defensive, but don't stick your head in the sand because I can all but guarantee when the evidence does turn positive, there's not going to be a lot of good news out there and people predicting things will work. Okay. Now let's hop into that evidence, into the charts. I'm using MarketSmith again, as usual. It's a product of Investors Business Daily. You can learn more at marketsmith.com. There's not really much to see here except the devastation. This is kind of where we were a week ago up here. And the market had, like I said, taken a couple baby steps, kind of held in here. Some stocks had hung in there. It was kind of a close but no cigar situation where, some things had acted better, approached resistance, didn't immediately get rejected, but really couldn't get over the hump, and now you see the result, okay? And pretty much every index we follow, except for a couple which I'll mention, have hit new lows here. So this is the NASDAQ. You can see we're very extended below the 25. This is the 50 and the 25-day moving average, not to mention the 200-day moving average. So, bounces are to be expected, but obviously we're going to have to really rally back up here at this point to get some sort of intermediate term signal. So obviously that's, going to take a little effort. It could happen, but it's going to take some effort. S&P 500, you can just kind of see this sort of breakaway momentum on the downside, so to speak. Doesn't predict anything, but we'll see how it goes. And it's just, I'm not going to go across the board here, but this is, IWM, Russell 2000, new lows, mid caps, same sort of thing, pretty weak. I think the mid caps have a little bit more building, construction related stuff, which obviously is probably going to be under the gun here with mortgage rates and everything going higher. New York Composite hitting new lows. One thing that is interesting, and I don't want to make too much about this, but I'm just sort of flagging it. This is the ARK fund. It's easier to see on the weekly chart. Interestingly, the worst performers so far in this bear market, which is sort of the ultra high glamour growth stocks, have not hit a new low so far this last couple weeks. Is it far from a new low? No. Could it happen later today? Yes, maybe. But I am just sort of noting it. The IPO fund is another one that kind of tracks. I actually kind of like it a little bit better. It sort of tracks the ARK fund a little bit, just a lot of the recent IPOs. You can see it's obviously been, here was your top phase, and then obviously it's been pretty much a one-way street here the last 6 or 7 months, but a little bit of a higher low here so far. Just something to watch, I'm noticing. I wouldn't make too much of it right now, but just kind of interesting that you can even see the relative performance line is kind of flattened out as opposed to, really jagging lower here the last few months. And then just looking around, this sort of leg. Well, actually, before let me start with this because I talked about the 3-leg downs. They'll play into this. There's no science to this. You can't say, well, every bear market has 3 legs or correction or whatever. But you do see things often play out in threes, and it's just a sentiment thing. The first leg is kind of disbelief, meaning, yeah, things are bad, but it's fine. It'll come back. Buy the dip, that sort of thing. Then you might get a second leg down where it's like, okay, we're in a bear market. It's not good, and I am trimming some stuff, but I'm not going to sell my good stuff. That sort of attitude. Then eventually, usually, you kind of get this sort of thing where it's like, number one, everything gets thrown overboard. So there might be this pocket of strength or this industry that's doing well. Those get trashed. And the people who are holding on to quote unquote good stuff say, oh my God, this stuff isn't really that good, And so I'm not saying, it doesn't mean, this has to be 20% and this has to be 20 and 20. It's not like that. It's just sort of more of a sentiment thing. So maybe this is sort of this realization where everyone's like, okay, the Fed is really on the rampage here. Inflation, recession, blah, 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 blah. Okay, just something to keep in mind. On that note, one reason I say that is we are just seeing, we did see this break. This is the XLP consumer staples. We did see this break before, and now we're seeing this come in. Again, I don't consider that really a bad thing. I think if defensive stocks are getting hit, I wouldn't say it's a good thing, but it could set the stage for, if ARK and IPO could continue to resist for a couple weeks and you see defensive stocks doing this, maybe it's a little subtle sign that the growth stuff is sold out. We're not there yet, but we're seeing this stuff get hit. We're seeing XLU, which is obviously utilities. This is just, it's not like this has been some port in the storm during this last mini crash. It's come down from 75 to 65. And then, energy stocks, you could look at a bunch of them, but XOP, which is, one measure of it, is down, whatever, sharply. Okay, now, it's not longer term. Maybe it's still okay. Maybe it just bases out for a while. And I actually kind of think some of the stocks probably will find some support in here. But with that said, there's clearly they're coming around for everything. So, just back to the market, just something to keep in mind here. We are extended to the downside. Maybe we're in sort of this puke phase where everything gets hit. But we'll just see how it plays out. Okay, so in terms of what to do, by the way, because I do get questions, I still own this, I still own that. It's the same sort of advice. The advice is, if you think you own some stuff that's really trashed, you don't have to go out and sell 5 stocks today, but just take a couple of steps in the direction of the evidence. Trust me, you'll feel better about it. And if you're selling at the exact low and you sold 2 of your 6 stocks that look terrible, well, guess what? Those 4 other stocks are probably going to bounce. So net, you're still going to do okay, relatively speaking on your decision. It's just best to kind of eventually get in gear with the evidence so that when we do get the turn, you're not focused on a bunch of old winners. You're focused on the new winners, and that's really where the money's going to be made, okay? Heading into individual stocks, I will say one, I don't want to say it's an industry theme yet or anything like that, but I am seeing more evidence that biotech stocks are kind of resisting. Again, I go back personally. This is the XBI. I know nothing, but number one, you can see it's kind of held. This is another one that's held its previous low, kind of like ARK and IPO. It's held its May low. Obviously, the trend is still down. I don't want to make too much of it. But XBI, this thing hasn't gone anywhere in years. It really wasn't a leader during the post-2015 move. And then it did have a run during the pandemic. It's given all that back. So it hasn't gone anywhere net for years. I just have a hunch that some of these can come into favor. Halozyme, obviously, is one of them. I keep mentioning this, HALO. This is really one of the only stocks, in fact, that I can say is actually forming kind of a legit base, it could actually, like, if the market turned around tomorrow or next week, it could just break out. Now, I'm not saying it's going to, or I'd go buy it here, but I'm just saying overall, heck, it's up 1 or 2% on the week at the time I'm recording this, and the market's down, whatever, okay? So Halozyme looks pretty good. United Therapeutics, UTHR, I wouldn't say this is as good a growth story, but you can see this nice long base. This was a big breakout. It's not that expensive. It's got some pretty good earnings, numbers, all the stuff's there. Obviously, it's outperforming the market, and it's pulled back here the last 2 or 3 weeks. But you can see it's pretty calm, cool, and collected. If it wasn't a horrible market, you'd look at this and say, looks like a pretty good buy right here. Not saying it is, but I'm just saying overall it's acting well. Some other things aren't really ready to, they're not in prime position here, but this is like Neurocrine Biosciences, NBIX has showed up in top 10. We've changed our screens in top 10 just to reflect the environment. We're still looking for strength, but it's a little bit more like, have we seen big volume lately, some recent outperformance, some higher lows on the charts. That's kind of what we're looking for at this point. You can see NBIX bottomed here back in January, hit a higher low on a bad earnings report a couple months ago, but immediately regained that. Obviously, there's overhead resistance, but this is actually kind of a low-level basing structure in there. What else? Seattle, well, this is actually, they call themselves CGen now. This is the old Seattle Genetics, SGEN. Something's going on today. I don't know if there's like buyout rumors or something, but you can see the stock's really taken off. But even before that move, I mean, that's certainly a positive. But even before that move, you had this huge volume support. It basically had bottomed a couple months ago. Again, you kind of have this bottoming action. Now we're seeing some follow through the upside, so we'll see how that plays out. Alny Lamb, ALNY. This isn't that strong, but one thing I'm looking at, and I'll mention this here in a second with a couple other stocks. The market, the initial market low was really in this late January period. Let me pull up. Hopefully, I'm not going in too many different directions here. This was kind of that initial puke low, and then you had the invasion, and then you kind of had the retest of the invasion, that sort of thing. But this was sort of the initial puke low. I think this was like January 28th. And you're going to see the NASDAQ or any index you follow, it's way below there. So if you see a stock that is firming up a little bit near term, again, you can kind of see early May, late May, just a little bit of higher lows here the last few weeks. And it's really in the vicinity of above where it was those late January lows. It's still got work to do, totally, but this is one of those names where if it had a good day or two, it's kind of like the market a couple weeks ago. It's put itself in a position where, like, if it has a good week, if it gaps up on some news or earnings, all of a sudden you're like, oh, maybe this should be on my watch list sort of thing. So it's taken some baby steps. Anyway, Alny Lamb, ALNY, not ready for prime time yet, but we are seeing some relative strength in the biotech space. So hopefully that will be sort of a leading group. On that same theme, since I mentioned the January thing, this is CrowdStrike and then Palo Alto Networks. Same thing, similar to Alny Lamb. They're not ready for prime time. You can see CrowdStrike in here. But again, the initial low here was back in January, and the stock was at 150, 160, and here we are at 160. Okay, so net, while the market's gone down, whatever, 10 or 15%, and growth stocks have come unglued here in the last few months, stocks like this are trying to resist the decline. Yes, it needs work and all that, but CrowdStrike, and it has great numbers, is a big attraction too. Palo Alto Networks, same sort of thing. It finally broke here, back in, this was during the April-May decline. Much higher low here recently. I think it reacted well to earnings right off that low. And again, this was your late January thing. I'm not trying to make this into some magical formula like, oh, if it's at the late January low, it's going to be a leader. No, but it's a sign of relative strength. And you can just see, relative to the market, here was the RP line back then. Here it is today. So it's trying to resist the decline. Let's see how it goes. So a couple of the cybersecurity names. I still like Celsius. I know it gets hit. It's very volatile. But this is the energy drink maker. It had this huge run. It's not surprising to me that it needs more time, but the stock, again, stopped going down here in January. And back then it was at 40, and here we are at 55 or whatever. Obviously, if you bought it 2 weeks ago, you're getting hurt. But if you're just watching it, keeping it on your watch list, some of these things, just a little bit more time and seasoning certainly wouldn't hurt. Let's see how it goes. Obviously, it could melt down, but if it can kind of stabilize in here, the market can firm up. I still think that's in position to kind of round out a basing structure. I wanted to mention Bumble. I think I've mentioned this before. It's getting hit as I record this today. It's down 7% or whatever. But again, I still see this sort of bottoming an area in here, trying to bottom. A couple of huge volume clues on the weekly chart, trying to bottom out for a few months. Obviously, it got rejected at the 40-week line, which is not unusual. I think we even mentioned taking some partial profits in it in top 10. But now let's see what happens as it approaches an area of support. Okay, I still think this is sort of a new, fresher name that's gone through the ringer. The thing was down like 80% after its IPO. It came public right at the worst time. But now it's trying to bottom out, and the numbers look pretty good. Just a few other random ideas or names anyway. I'm not saying you should go plow into these, but financials just to look at XLF. These are financial stocks, look like the market, pretty bad. Then you look at LPL Financial. This one does have leverage to higher interest rates. You can see the earning. I don't know if you can see it, but the earnings estimates over here this year and next are huge. So that is part of the story for sure. But it's also, one of the largest independent broker dealers, I think, and investment advisors and that sort of thing. And just overall, again, you're just kind of seeing a little bit of a structure of higher lows in here. It's above the 200-day line, which in this market is like heroic. Okay, so let's just see. I'm kind of keeping a distant eye on it. Maybe it can round out and eventually get going. Ollie, this is sort of a turnaround. Retail stocks have been death, but Ollie was death a long time ago. So it's kind of already gone through the ringer. You can see it really wasn't. It had this post-pandemic run, but died on the vine pretty much. But again, here's your low in early January, higher low in May, and now the stock's actually pushing higher. And next year, you can see right here, is supposed to be a big turnaround year. We'll see. It's always had a pretty good story. It's a bargain, one of these low end retailers, which is kind of a good thing these days. But just kind of noticing some of this, maybe the growth story is back on track. And then last but not least, well, two more actually, and then last but not least, Scorpio Tankers. So this is a lot of shipping stocks, commodity names have gotten hit totally. A lot of them have broken. This is an oil shipper though, and there's some other things going on. You can just see this is really a lot of momentum in here. Now short term, that's probably going to be a bad thing. You can see it's down this week. But longer term, I'm not so sure. We'll see. It's hard to trust them, but after doing this for a couple of years, I'm not so sure that's going to be the end of it, and then it just comes back down. So my guess is if the stock can kind of pull back normally for a week or two, you could be looking at a halfway decent entry point for STNG. And then last but not least, I mentioned this last week, is China. I know this is another one. It kind of looks like Ollie, but nobody likes China, but huge support a few weeks, a couple of months ago, I should say. Kind of a retest. It's above the 50-day line, the 10-week line. This is PGJ, which is kind of an ETF for all American traded ADR, Chinese ADRs. I hear you on China. I can hear you through this, the microphone here. It's like, why would we invest in China? I wouldn't right now, but it's certainly gone through the ringer, and sentiment is bad enough where you wonder if the government got the message to be a little bit more open and easy and that sort of thing. So that's kind of interesting. And just, one that has a similar pattern that used to be an old winner. This is Pinduoduo. You can see on the weekly chart, it really broke out here and had a nice run, really nice thrust here to its ultimate top, fell 90% or whatever the percentage was. But like most Chinese stocks, it bottomed back here in March, retested in May, and not only has it just held up, but it's actually shown some real power here, well above the 50-day line, hitting the 40-week line, the 200-day. It's probably going to pull in, just given the environment. But I am just seeing more and more Chinese stocks that are at least trying to bottom out. And my guess is they'll take some more time to bottom out. But it's something just to keep your eye on and mind open to going forward. Just going back to the market, we'll see how things play out. I mean, I think right now we're starting to hit the no hope phase. A lot of people are, the market's down, 401ks down, growth stocks are down, energy stocks are down. I thought those were good too. They're starting to get to the kind of no hope phase. And that's usually, I don't want to say usually when the market bottoms, but that's usually something that's necessary before the market bottoms. So just keep an open mind, definitely be defensive. You want to protect your capital here and your confidence, but keep an open mind. We'll see how things play out. Let's see if we can get a few up days and then work off of that. But for now, just about being defensive and staying safe until the sellers finish up their work. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.